So in this snap video, I'm going to be providing an update on Emmerson PLC. It's a company that I've covered before on my YouTube channel, and if you look back to just about a year ago now, I did an introduction video on the company, its management team, their history, the project itself, and a little bit about the potash market and the roadmap for the company. And where I left that video was Emmerson were about to produce their scoping study. And if you have a look through the RNSs from last September, you'll see that there's been no shortage of news flow from the company. So I'm going to provide a quick update in this snap video of what they've achieved in that time frame and where the company are now and what we can expect going forwards, which hopefully will help investors get a good up-to-date snapshot of the company and where they are. So just as a brief introduction, Emmerson are running a potash project in Morocco. It's an 800,000 tonnes per annum project, and it's the K60 mop product, which is the most common and saleable fertiliser product available. And what's striking about the project, I think, more than anything else, is that it's got an incredibly low capital cost by comparison to other peer projects globally. So they're looking at basically a 406 million capital cost, which includes a 25% contingency of around $90 million as well. So this is incredibly low when you think you can look at Canadian projects, which are running at typically around about $1 billion plus capex, which is a huge amount of financing for any company to try and achieve. And one of the reasons why Emmerson's capital cost is so low is because their mine access component is markedly lower than other projects. So just a quick run through then. It'll be a fairly brief overview, but the first piece of news that came towards the end of last year was the scoping study, and this confirmed a low capex, high margin operation. And you can see there an NPV of 795 million with an IRR of 29.8, and that was based on Brazilian benchmark $360 a tonne mop prices. If you use some of the industry forecasts, the NPV goes up to 1.14 billion. And this is over a 20-year mine life, and these are good numbers relative to the capex, and they achieve an EBITDA margin of nearly 64%. So a very healthy free cash flow forecast annually, and I think that's in the region of something like 184 million per annum post-tax cash flow. So that was a fantastic update, and obviously now from the scoping study, the company are progressing through other milestones towards their DFS. So that was late last year, and then in March of this year, they completed the environmental baseline study, and that showed no major concerns. So this all feeds into the sort of permitting process, and then following that in April this year, they signed heads of agreement for 100% offtake of the product to a major global fertilizer trading, distribution and marketing company. And what we hope we'll see from that is a binding offtake agreement in due course. And in fact, that could be sooner rather than later, given the guidance we've had in previous RNSs. And then they announced the commencement of the DFS, and that's obviously underway at the moment. And they're making good progress on that, and the guidance for that is that we should be receiving that in H1 next year, which could come any time between March or May, listening to Hayden on a recent proactive interview. And then in June this year, they got, and this is probably one of the more significant pieces of news actually that I've extracted here. They got a major European bank come forward and give them indicative terms around up to 235 million debt financing towards the capex cost of the project. Now, I haven't seen any other junior mining company relative in capex size in market cap size achieve some sort of indicative offer like this from a bank to date. So this somehow goes towards showing the strength of either the management team or the project or both of them. This is a significant indication from the bank, and this agreement was based on a 35% discount to current spot fertilizer prices as well. So there was a fair bit of contingency on the bank's part based into the model of how much they were going to lend. And of course, if prices improve as we expect, then there's no reason to think that capex offer couldn't go up. However, that's a chunky part of the 400 million, considering the 400 million actually has got 90% contingency baked in. And obviously, as they progress the DFS, they'll actually get more clarity around whether this capex figure is going to come down, and which it could do. So for me, this was a significant piece of news. As per usual in the AIM market, I don't think it was really acknowledged, but I think that was significant for the company. And then in July, the company announced rather an unexpected RNS, which was a PEA for sale of salt byproducts. So as part of the whole operation, the potash mining, they have a salt byproduct, and they've actually come up with a preliminary economic assessment that shows that for a 12 million capex figure, they can achieve 130 million MPV on that product, and this will go on in addition to the existing MPV figure around the Chemiset project, the fertilizer product. So that was a nice little bonus, and I think they're planning to include that potentially in the DFS itself, because they can, in terms of the mine plan design, factor that in. So that would be interesting to see whether that comes as part of the DFS. In September, they completed the drilling program, and all indications there were good, and this will feed into the mineral resource update, which will be coming in due course. And most recently, they announced the consolidation of permits. So what's happened here is they completed their permitting, if you like, analysis on what they'd need to do, and there was, I think, circa something like 20 permits that would be required, which sounds like a bit of a headache, and would be a headache, administrative headache. They've managed to go back to the government and actually agree with them, and I think this is like the first time anyone's done it, a streamlined process where they can handle this in one submission, so they can consolidate everything into one process and achieve the mining license. And the government obviously seemed very keen to work with them. This is an important project for the Moroccan government. It's a globally significant project, and in terms, as we said before, the capex side of it, a very feasible project to come online as well. So that was good news as well. So the company really have been working hard, delivering. I like to see lots of delivery, and they really have over-delivered here. So just to wrap up then, in terms of what we expect to come now, looking at recent RNSs and listening to recent interviews, we would be expecting to see potentially binding offtakes following that heads of agreement. It'll be fantastic if the company can secure a binding offtake for 100% of the product, which is what was in the original MOU. If they do that, that's going to bode incredibly well for financing discussions, and the guidance is that should be coming very soon. And Hayden touched on that in a recent interview, that they were at sort of like final stages. We'll then also have the mineral resource update, which will convert resources to some more confident figures like measured, indicated, and feed into the DFS, so that we have a robust DFS, and the DFS numbers themselves and the DFS delivery should be H1 2020, and the guidance is anywhere from March to May for that at the moment. And if history repeats itself, then the company could potentially deliver that ahead of schedule. So I think the last thing to say is that the company are fully funded right through till 2021 now, after the recent raise that they did at 3.75 pence. You can buy the stock today below that price. The AIM market at the moment is, as we all know, is suffering some woes, but and that's giving opportunity in a number of stocks, and Emmerson looks pretty well placed at this stage with the news flow coming and what they've achieved to date. So I hope you enjoyed that little update there, and keep your eyes out for more updates.